Hey folks, Dan Frio here, the rate update. Today is July 13th, 2021. We're going to talk about next is the bond auction today, inflation, and what this is all doing to mortgage rates. You're not going to like it. Don't go away. We'll be right back. Okay, so I did some digging last night into what spiked or what plummeted the MBS market while we were doing our video live yesterday. We went from a +6 to a minus like 20. And there was really no reasons last night for that, unless some information got leaked from this morning about all the inflation numbers and everything else. And then we had a bond auction today that Rick Santelli will tell you a little bit about right now, and then we'll be right back.
Yes, we are expecting our June read on consumer price index, and as Becky pointed out, things like commodities have really reversed, and the numbers are in, and they're much hotter. Up 9/10 of 1% for headlines. Strip out the all-important food and energy, still up 9/10. And if we look at year-over-year CPI, which has the base effect, we know it's going to be a bit higher because of depressed COVID levels a year ago, zooming up to 5.4%. And if we look at ex-food and energy year over year, up 4.5%. All these numbers are hotter than expectations. All these numbers are hotter than what's in the rearview mirror. And we continue, of course, to point out certain things. Yes, there are going to be bottlenecks that are going to reverse. There's going to be supply chain issues and commodity spikes. They're going to reverse. But are there things that may not reverse, or it's too early to tell? I certainly think so. And I think one of them we put in our gas tank every other day. We have air conditioning on. Energy prices. 48% of small businesses, Becky, have raised prices in May. That's the highest, largest percentage in 40 years. And we all know green and climate change. There is a bit of a war on fossil fuels. There will be a price for that. Might be a moral thing to do in many people's minds, but trust me, when it's 100 degrees or you need to charge your EV in certain states, it's going to be an issue. Sticky energy prices, also services, and what's the most important aspect of any business, the best asset they have? The ones that go up and down the elevators every day. And I personally think, I don't know. I think when prices start to go up for wages, I think they're going to be a bit sticky. I wouldn't look for the Fed to normalize, but I think certain higher prices will not only normalize, they'll become part of the fabric of the economy. But that's just my...
Okay, so Rick hit it on the button. Inflation, inflation, inflation. We know inflation's here right now, so that's not a huge buzzword. But, what's going on in the markets? So let me give you my backdrop on what, I'm trying to piece this puzzle together for you, because you're going to see every day there's some news that really skewers, which way the economy is going to go. So we follow here real estate and bonds. Why bonds? Well, because part of the bond market in general consists of mortgage-backed securities. It's a bond that trades on Wall Street that is the biggest determinant of your mortgage rate. Okay, so basically that's why we follow the mortgage-backed securities meticulously every day, and hopefully why you're joining in on the channel today. So here's my backdrop on what's happening with inflation, and then we'll go into real estate and so forth. So what do you have right now? You might even be looking at yourself saying, Dan, right now I'm in forbearance, so I don't have a mortgage payment. Okay, so that extra money, let's say you're working, and let's just amuse me on this one. You're still working, and you also got the stimulus money, but you don't have a mortgage payment, and you have one or two student loans. You don't have to make that payment as well, and you're getting the additional benefits from the CARES Act. So what are you doing with all that money? Okay, most people are going to save it and or spend it. Okay, that is what's happening with 70% of the economy. It's far outrunning the people that are hurting right now, and there are still millions of people are hurting, but there's more people that are not hurting. Okay, that's just in the numbers. That's in all the technicals. You can do as much analysis if you want. And if you want to debunk what I'm saying, please debunk it down below and give me articles to support your agreement or your position. So what I see as I do this on a daily basis is people aren't selling their homes. They're not even refinancing if they're in a forbearance. Why? Because they're not making a mortgage payment. So why would you look to refinance and have to start making a mortgage payment? Or why would you sell your house and then have a housing payment some way, somehow on the alternative of that? Because you'd have to buy or rent or move in with your parents. That might not be an alternative. So the other two things would make you have to have a housing payment. So everything is basically going to stop in September. A lot of people were removed from the forbearance packages just recently, the end of June, in the beginning of July. That is going to spur more houses on the market. That is going to calm down this crazy bidding war with everything. If you got into that bidding war and outbid on that house by $20, $30, $50,000, I don't know if you're going to see those numbers anytime soon, because I'm looking at the real estate market kind of being flat. Not a bad thing is, why do you buy a home? Your number one reason. It's probably not for the investment piece of it. It's to live somewhere, to have a white picket fence, a dog, the 1.5 children, the spouse, so forth. And the American dream of that. A lot of people are saying, no, I'm going to rent. I'm going to rent. Go ahead and rent. But what I'm explaining to you, I don't think it's a bad investment. Let's even just say, it stays stable for right now. At least you're paying down your mortgage, and you get some write-offs on real estate taxes and other things in that equation, and you have your own home. You're at least, let's say you stayed in that house and it didn't appreciate a penny in 30 years, not one penny, but you made payments every month. So what would happen at that mortgage balance? It'd be zero. What happened if you rented? You'd still have to make a rent payment 30 years later. This one, now you own that house. Let's say it's $300,000. Now you have $300,000 in equity on a property. Sell it, retire. Okay, so that's my analogy behind all that. So now let's get into what the numbers are saying today. Well, the inflation numbers came out crazy today, but that wasn't the end all beat all. What happened is the bond market had an auction at 1 o'clock today. I'm going to show you these numbers, and it was dismal. Basically, people are saying, guys, inflation is running out of control to a point. Okay, that's debatable. So we want higher yields on our bonds if we're going to buy bonds. So what happens is the prices have to go down for the yields to go up. So the bidding on these bonds was terrible, and it pushed up yields. So let's dig into these numbers, and then we'll go over what my projection is for rates later this week and next week. Okay, so you see here, inflation's just jumped the most in years, yet market is largely ignoring it. Okay, but they didn't ignore the bond auction when it came out at 1 o'clock noon Central Standard Time. But Treasuries, long dated yields jump after the 30-year bond auction. So again, what it's summarizing here is saying investors are requiring higher yields if they're going to invest in any bonds, especially the Treasuries. Okay, so here's what we saw today. And remember, yesterday's video, I went over the next 2 days, we're going to start seeing the inflationary numbers, or the gauge on inflation. And then Thursday and Friday, we're going to see what the job market's doing. All right. So we look over here, consumer prices year over year, 4.5. 4.5. They thought it was going to be, or last month was 3.8. They thought it was going to be 4. Remember, I deferred on this, and there was a reason for it, because I think in the next 2, 3, 4 months, the Fed's going to ignore this. I truly think that way. Core price, our consumer price index year over year, 5.4. We haven't seen numbers in the fives. I don't know when last time we're exceeding 5%, but that's where we are. That's the inflationary number. Month over month, we were up almost 1 full percent from where we were last month. That is a huge move. And then consumer prices, ex food and energy, we're still almost up 1% month over month when you extract food and energy. Okay, tomorrow we still have a lot of these numbers back in, and the Federal Reserve is going to monitor all this. All right, then Federal Chairman Powell is going to speak at 11 o'clock. We don't have another Fed meeting until next, the 26th and 27th. That will have an impact, because Federal Chairman Powell is going to come in and make some clarifications here. And so we might have a little hiccup latter part of this month. And then the rest of the week, we have the employment numbers. This is where the Federal Reserve is really focusing in on. Again, my assumption here is I don't think there's going to be any major revisions on job numbers until they get rid of the CARES Act piece of this that extends out the extra benefits paid by the Federal Reserve, or federal government, I'm sorry, not Federal Reserve, federal government, to those that are out of work. And the unemployment claims keep going up and up and up. That's not a good thing. Okay, so that's what we see through the rest of the week. So now, how is all this reacting based on the news out just so far today? Well, I'm doing the video because it was just the bond auction just lapsed, and here's what we saw. We came out of the gate and we dropped. Okay, we had a continuation from yesterday, but then we rallied back, and then right around noon, you can see it right there, the wheels came off. But the good news is, look right here, the green candlesticks tell us there's a lot of buyers stepping into the market to buy up the excess mortgage-backed securities. Okay, so they're not going to let this completely crumble. All right, so we're only down 14 right now. It went from being up 2 or 3 to down 20 something. Now we're only down 14. So that's good news. It's a little reversal. And again, what these greens mean, there's more buyers in the market right now. All right, so let's go to our averages. You can see right here, let's check our technicals. Let's get rid of the 200-day moving average. If you follow me daily, you kind of know what we're looking at here. All right, so what I said is we should be trading in this range right in here. Okay, why? This is where all our technicals lump together. We have Fibonacci levels right here that go across. All right, those aren't really coming into play right now. But we do come into play is the 100-day, 50-day, and 25-day moving average, which all consolidates right in here. So I'm looking at us clearing this right here, the 103.4, and as long as we close above that, our next line of defense is the 103.6, and then a rally up to 103.8. We'll know more on this as the employment numbers come out and more bond information comes out tomorrow with this information coming out. Okay, and then Federal Chairman Powell, he'll be speaking at 11 a.m. tomorrow. We will be on our laptops and computers and everything we can to watch that so we can report back to you on what he said and what's going on. Right now, guys, it is choppy as all get out, but I'm hoping these technicals hold so we don't have a complete crash down to here again. We've locked in. There was a rate lock alert that I just pushed out for all my people to lock in before we see this change. So what happens here on this? Why do we watch this number right here? Well, this is basically the mortgage-backed securities market is that. It's a bond that trades on Wall Street that is the biggest component of your mortgage rate. So what happens is, let's look at this as a crystal ball. It's the chart of what's going on with the price of a mortgage-backed security. So there's the MBS markets, then there's the banks and the this and the that and everybody else. So let's say in this chart, my pricing desk, or the person that we've hired to control our mortgage rates and our rate sheets, they watch this data. But by time they get all this data inputted, they see that yields are changing, they go into the system, they start making changes and so forth. It's about a lag time of about 15 minutes, say, give or take a minute or two. So when I see the market completely make a reversal, it gives me about 15 minutes to lock in your rate. So this might be a change of your rate of maybe 0.2%. Well, to avoid that, what do? Well, if you guys check your emails, I probably emailed 10 people yesterday that was asking me, hey, Dan, can we lock in, or what do we do, or how do we monitor, and so forth. And what I always say is, guys, I can't lock you in unless I have your data. So I need you to apply online, at least so I can have your data available or your file available to lock in the rate if we have a big reversal in rates. So if things are just stagnant, we can hold, but I can't do anything unless we have an application from you. So if you're building a house or you're buying a house, please reach out to us, because we're at your beck and call. You're going to have a loan officer assistant, and a processor, plus me in the background, all working on your file. Okay, it's not just a newbie that's going to jump in and type in some stuff to you, and you go back and forth with them, and they might not know what they're doing, or they might know what they're doing, but still don't have a team behind them. That's what we offer here. So if you're looking to do any of those things, one, if you're building a house, most builders won't finance you past 60 days, or won't allow you to lock your rate in past 60 days. In most of the country, we will allow you to lock up to 1 year. The number two piece is, if you're looking to get pre-approved, this isn't a time frame where it just takes 5 minutes to do this, and you go out looking for a house. It might be Sunday afternoon. You might not be able to get us. You can chat with us on here. You can print out your own pre-approvals on here. You can do almost everything you need on your loan file right here. If you're in a forbearance and looking to refinance, all I ask you to do is call. We aren't going to bite your head off. It isn't a hard sale. Basically, we're going to ask you why. Why? Here's a normal conversation that we have. Dan, hey, I want to check in what your rates are because I'm looking for a lower rate. Why are you looking for a lower rate? Oh, because I want to lower my payments. Okay, you want to lower your payments. Is your total overall budget bad? Maybe we look at doing some bill consolidation. Maybe we pay off that high interest rate credit card. Maybe we do this because there's a lot of benefits in there. A lot of people say, I'm not going to pay off a credit card with a mortgage because, it'll take me, I can pay off that credit card in 2 years where a mortgage is 30 years terms. Have you paid off all your credit cards in the last 2 years and you have a zero balance? Or are you still living on credit cards? Most people run up credit card debt because their spending outweighs their income. So we can help you align those things. Or I might say, okay, you're looking to get a lower rate. Why? To lower the payment. Are you comfortable with your payment? It's not bad. Wonder if we reduced your term, reduced your interest rate, and kept the same payment. Let's say we can cut off 8 years of your payments by refinancing to the lower rate, but you got the same payment. So that lower rate would make it that you save, let's say you pay off your house 5 years early, and your mortgage payment's $1,000 to make it simple. So 5 years equates out to 60 payments, okay, on a monthly payments. If you saved $1,000 a month, at $60,000 you would save in interest. Makes sense. Okay, so to learn more about me and my team, all I ask you to do is check out our new website, and features are being added on a daily basis. We do have the calendar back up. So go to therateupdate.com. You can go through here and check out all the sources we have available up here. The one biggest source everybody's using, affordability calculator and mortgage calculator. You can go through the housing guide, your loan options, and a whole slew of other things. If you want to check out my YouTube channel, go to resources, and then you're going to go to the rate update, and that'll bring in all of the videos that I've done. And there's over 900 videos here. You can keep scrolling down through. What I'd ask you to do is please subscribe here. You can load more, and it'll even load more data. But check us out and subscribe right there. The next thing you could do is you can apply online. So you can click here and apply right now. Or if you're like, hey, I want to find somebody that can help me, check out Meet the Team. There's 12, we're adding loan officers on a daily basis and loving it because we're doing trainings twice a week and everybody's getting really in tune to this. But also, if you see a state here, let's say you're in, Tennessee. I'm in Tennessee. Let's say you're in New Jersey and you don't see it up here. Please click the Apply Now button. We're still able to help you. I have loan officers licensed throughout the country here. Just because I am not licensed maybe in that state or one of the people here are not, doesn't mean we can't help you. We can help basically everybody in the entire country. The last but not least, give us a call. We're not going to bite your head off. We're basically here to be your mortgage consultant. 844-775-LOAN. Right here. But the feature that a lot of people are liking, and I strive to get it on this, scroll down to the bottom of the page. Here's our calendar events. Okay, you can pick between a 15, 30, or 60-minute consultation. You just click that. It should only take you 15 minutes to 30 minutes. You'll check the availabilities. I'm usually in trainings on Tuesdays and Thursdays, training my staff. But let's say you're available on the 21st. You can do that. Pick the times I have available. It looks like they've been gobbled up quite a bit, but just click there and confirm it. You'll get a confirmation email, text. I'll get a confirmation email, text, and then you'll get Zoom links and phone number to call so we can put that meeting together so I can answer every and all the questions that you have. So that's it for today, guys. God bless. Thanks for watching. Please make sure to leave a comment down below so if I can be of any help to you in any way, I'm here for that. Give us a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. Take care, guys. I'll see you tomorrow. Bye-bye.